Again, I'd like to thank everybody for taking the time to be on the call today. One of our goals at Milner is definitely to provide you with some actionable sales ideas that will hopefully help you to start conversations, to help your clients, and ultimately, we want you to earn more revenue. We know, however, that providing ideas without the tools to implement them is a lot of times not very effective. So consequently, we've purchased some advanced planning software that really allows us to create customized presentations for you and for your clients that hopefully will help you to show your clients the valuable planning strategies that you can implement for them. So today, I want to show a brief summary of how this software can help you in your business. I'm not going to talk about, by any means, everything that it can do. I'm just going to give you a few snippets to kind of show you what I'm talking about in the hope that you would, give me a call and we can talk about a case. All right. So what is the software? Name of it is Insmark, and it's probably the premier advanced planning software for insurance professionals. It really goes into all kinds of different planning techniques for life insurance sales, annuities. It also has lots of tools in there that aren't even related to life insurance. And the idea there is that you can provide a lot of value to your clients without ever having to talk about a sale all the time. Sometimes you're just an advisor, as you know, that provides a lot of information and becomes a resource for your client. So there's tools like that as well. A few things that it can do. A lot of different areas of estate planning, business planning, whether it be buy, sell, or key person, all kinds of charitable giving stuff. We have a whole database of reports that we can do that focus on whether it be charitable remainder trust, charitable lead trust, whatever it be. We can give you all the details of that. There's specimen trust documents to kind of give guidance to attorneys in drafting them, all kinds of information there. Pension max, premium financing, we have a whole module that is dedicated to that. Split dollar, even just cash flow optimization for your client specific situation. And that's just a little bit of what we can do. There's all kinds of different categories here. It allows us to create customized presentations. We have all your clients' information. I'm talking, we can get some very detailed stuff in there. And we're also available for sales support on this. So if you wanted to have me on the phone or Michael on the phone to be a support to you while you're having a conversation with your client, we're absolutely available to do that. Also, if you needed some in-person support, we could provide that as well. So I want to give you a few ideas, a few tastes of what sort of presentations we're talking about. This is a very simple one. I'm going to give you two that are very simple and one that's very in-depth. So here's a simple charitable giving output that I really like. It's called pennies on the dollar. This allows us to just really, in an easy one-page format, show your client the benefits, the tax benefits, and the leverage using life insurance that they can pass a legacy on to a charity. So you can show them, hey, Mr. and Mrs. Client, you can give $50,000 to this charity, but hey, it's only going to cost you $30,000 because we're going to set this up in such a way where the charity owns this policy, so you get to write that premium off, and then you're going to get leverage on that, a huge amount of leverage with the death benefit that the life insurance policy provides. An easy way to think of it, Mr. Client, we like to think of is at your life expectancy, we like to tell you how many cents on a dollar this costs you to show you the leverage. In this case, somewhere around 22 cents on the dollar. That's the kind of leverage we're able to get by, one, deducting the premium, taking advantage of that, and two, leveraging it with a life insurance plan. So I wanted to show you this because I like this report. It's very simple. I think it's very effective. And not all of these reports that we do are very complicated. They can just really help you lay out something in a very easy to see manner and hopefully increase the amount of sales you can make in this space. Here's another one that I really like that really on the surface doesn't have anything to do with life insurance. There's a report called, it's a traditional versus a Roth IRA. I'm sure you've talked about this a lot, but it's a very simple report, and I like it because it really shows the difference between these two. Maybe your client asks you for some advice on this, and you can just run this quick report for them. And also it may open the opportunity for a supplemental life insurance retirement plan, right? Because that's treated very, very similarly to a Roth IRA. And you're going to have some clients with the phase out that don't qualify for a Roth IRA, but may like to have that treatment, and you can set up a plan for them. So it may get that conversation started just by helping them to understand this. So we show them very simply, they can make a $5,000 contribution to their IRA, but if they wanted to make the equivalent of contribution to a Roth IRA, it'd be $3,500, right, because they had to pay taxes on it before they put it in there. Very simple, shows the money accumulating both at the same amount, same rate of return. And then we show them what their retirement's going to look like. So in order to get, about $25,000 a year out at retirement, they have to take $35,000 out of their regular IRA, but they only have to take $24,000 out of the Roth, right? This is a very simple presentation, but it shows them, look, when you get, if you make it to 90 or so, you've still got $500,000. Your plan is actually continuing to grow, whereas with your traditional IRA, you're running out of money pretty quick here. So pretty powerful, but very simple sort of presentation. And again, hopefully, could open the door for some sales. All right, so I want to get into a little bit more complicated scenario that shows more in depth what the software can do for you. Okay, so in this scenario, this is a wealthy client, $35 million net worth total, male and female, age 65. Their wealth consists of $20 million of a closely held business. They have $5 million in liquid assets. Now, here's where I would say, in order to even get into a case like this, really I would very much urge you to use a fact finder. And we have all kinds of fact finders that we can give to you for whatever the scenario is, to help you make sure you don't miss any of these planning opportunities, and that you have everything in one place so that you really can have the ability to do this in-depth of a report. Okay, so they have $5 million in liquid assets. That's just a summary. It's in different places, money market account, etc. $5 million tax deferred in different qualified plans. They have a very expensive house here, a very expensive vacation home. Not surprising given their wealth, but this is where their money is right now. So how can we help them? Well, we can look at two different scenarios, and we can crunch the numbers on them. Let's say, Mr. and Mrs. Client, you don't do any estate planning at all. Okay, what was likely to happen to your wealth? It's growing pretty well right now. Your business is doing well. We expect that your net worth is going to go up by a lot by the time you actually pass away. So if you don't do any planning, your $35 million is going to turn into, assuming the IRS does not change laws and make it worse than it is now, which that's a different conversation, you give $85 million to your family and $47 million to the IRS, zero to charity. Okay, $85 million to the family sounds great, but $47 million to the IRS, they're probably going to be shocked and horrified at this number. I know that I would be. So we like to say you have three different choices of where you can put your money when you die: family, IRS, and charity. You get to knock one of those off, but you got to keep the other two. So which one would you like to get rid of? What if we do some estate planning? What's it going to look like? So we start some estate planning at age 65. We are now giving $51 million to the family. We've shifted some wealth, not quite as much to the family, $117 million to charity, zero to the IRS. So we have done a 27, almost a 30% increase in the value of their estate with leverage. We've also taken away the entire pie from the IRS, $47 million in the other example. And we've made a huge legacy both to the family and to charity. Now, say they're not quite as charitably inclined and like to give more to their family. This is just an example. We could switch that amount up some, okay? Certainly. All right, so this is just a very easy two-page to explain what we're doing, and now a little bit more into depth about how we came up with this. What is your client going to be thinking about behind the scenes with all this? Well, they're going to be thinking, what's my cash flow going to look like? Probably, right? They're going to think, how am I going to pay for all this? How am I going to keep my lifestyle the way that I currently have it? Is this going to intrude on that? Can I really afford this? Well, first we're going to give a summary of where all their assets are. Okay, we've broken down into liquid assets, equity assets, tax deferred, illiquid assets that they have. This family actually, not surprisingly, has been approached several years ago and set up an ILET and funded with a $2 million policy. We're going to take that into account as an outside the estate asset. We're also calculating behind the scenes what their cash flow from all their different sources. Now that's going to be from retirement accounts, from liquidating liquid assets, from taking dividends off their closely held business. All of this is taken into account. We've figured out that they can afford a $40 million insurance policy inside an ILET to pay to basically replace the value of their business to their family members. They decided with their family that their family members don't really want to run this business, okay? Their children don't want to. Their business is growing. It's worth 20 now, but so we know that by the time that they pass away, very likely it could be worth 40. So we're going to use 40 as a wealth replacement trust for the family. And then at the same time, we're saying, look, you've got more income that you can use to purchase a policy to leave to charity, and this is how you're going to cut out the IRS. We're going to do a planned giving program over time, and we're going to use a life insurance policy as leverage. In this case, it comes out to $58 million. Okay, so they have total assets outside the estate of $100 million. We have, now here's where this is really powerful, okay? They've got a lot of different assets in a lot of different places. How do we tell them, how do we even begin to tell them where they should take money from in what order? Well, the software takes into account taxes, takes into account growth rates, and it actually will calculate the most efficient way to liquidate assets. In which order should you start paying for these things? Very powerful. So here's where it breaks it down. Cash flow funding, they're going to use money market funds, mutual funds, 401k, and closely held stock, dividends off of that to pay for this. That's the order that was calculated. That's a really powerful tool right there. Okay. Like I said, we're taking into account growth rates, management fees, all kinds of stuff, anything you can think of for real-world calculation here. So there's that report right there that's just breaking everything down, summarizing. Okay, now here's the cash flow analysis. The client told us that they needed approximately $300,000 in today's funds to fund their current lifestyle. Now, we want to keep that lifestyle for them throughout their retirement. So that's going to be, in reality, growing at inflation, right? So we're taking that into account. This number needs to get bigger every year, or else their purchasing power, in reality, is going down, okay? And the after-tax cash flow they need for the gifts they're making is a little over $1 million here, $1.3 million. That's funding the insurance policies that they're purchasing, both for the charity and for their wealth replacement trust for their children. So here's the total amount they need in column 3. Here's the expected cash flow that they currently have coming from different sources, their business mostly, that they already have. So they're going to have to supplement that because that's not enough. So they're going to have to start liquidating certain assets, which is good because they want to reduce the size of their estate anyway in a planned way. So like I said, it's going to go ahead and break down the best, most efficient manner to do that from a taxable account, then from their tax-deferred assets, from equity off the business, etc. And we can see we've got everything funded. And we can show them here that, look, with this plan, you can afford with your current assets, with these assumptions we've talked about, return assumptions that you're comfortable with, you can afford to do this plan. And we can adjust it in any way you want, but we can show them that they can afford it and where they should take the money from in the most efficient manner. Pretty powerful. And then at the end, we can show, look, let's do a summary of your wealth transfer here. Okay, so we have your total estate assets without the planning in place right now. Your transfer taxes are going to be pretty high. That's what's going to go to the IRS, but we're going to plan that out of the equation here. In the end, we're assuming they both die at 90. We have to pick some point to show them what's happening. We've got it arranged so that a meager $171,000 goes to the IRS, almost nothing compared to what they have. $51 million to their heirs, $117 million to charity. Okay, pretty powerful summary right there. And then we take all of that. There's more supporting documentation in there as well. We put it into a pretty report, whatever sort of photo we want on there, have your client's information, have your professional information down here. We can bind it, put it in a little booklet for you to leave with the client. Just make it a very professional presentation for you. All right, like I said, I'm just kind of scratching the surface here. Hopefully that kind of piqued your interest for what this can do for you, and there's a whole variety of places where this can be applicable in your practice, whether it be something very simple, like I talked about, even if it's how do I show a client that wants to buy term and invest the difference? How do I show them whether or not that's good for them or whether or not they could do better with a permanent policy? We can do a report on that. Anything from very small stuff to things that aren't even related to life insurance to very big, complicated estate planning cases like we just discussed. All right. We have any questions at this time?
I do see that a couple of you have, kind of checked the question tab there. If you would give me a second, I'll try to catch up. Ken, if you would type a question in the chat bar or in the question tab, either one. The question I do have so far, Jake, is are we adding the illustrations, the life insurance illustrations that you're referring to here? Is that kind of funneling into the software, or is that separate?
That's a good question. So often a life insurance illustration is going to have a lot of moving parts, increasing cash values, increasing death benefits. That would be very difficult to deal with manually. So yes, I'm happy to say that this software actually will import the numbers from illustrations. So yes, absolutely, I'm running illustrations behind the scenes, and I'm getting those numbers plugged in most cases automatically into this software, and then I'm using the software to calculate, what all these different numbers that we're talking about, and then we're sharing that information with you and talking about it, and then we're modifying it however it needs to be. But yes, we are definitely taking numbers from the illustrations, and the illustration will also be a supplementary part of this presentation. So it'll be included. It'll be attached on there. But, we don't recommend you start with an illustration. So that'll probably be in the back.
Okay. Another question, do they have access, do the advisors and agents have access to use this tool on their own, or do they have to go through us for this?
You have to go through us. That's how the software works. But what I would say about that is you probably, I want to put this in the right way, you probably wouldn't want access to this. It's kind of beastly, the amount of stuff that you have to put into this and making it work with the individual home office software. We find that most of our advisors don't like to run their own permanent illustrations. Definitely some of them do. But if you are the advisor that doesn't want to run permanent illustrations, you certainly would not want to use this software, trust me. So we're very familiar with it at this point, and we're happy to show you what reports are available and to put it together for you and kind of make it useful to you. So that's a service that we want to provide for you at Milner.
All right, I don't see any other questions at this point. So I do just want to add a couple things as we wrap up here. One, we hope that you made a list of business owners and wealthy families that you can start a conversation with. One of the things that we hear from our top advisors when we talk to them specifically about these types of opportunities, one of the stories we hear over and over again is, I'd never called so-and-so because I just assumed they had everything taken care of. I'd been referred to them before. People had encouraged me to talk to them, but I just never did. And then when I finally did, I was amazed how much there was to do. So just remember, when you're calling these people, lots of people have stopped calling them, and there's an opportunity for you to bring a lot to the table here. The second thing that I would say is when you approach them, the thing we hear from our top advisors that's most effective is just offering kind of a 1-2 value punch. So don't call and say, I want to spend an hour with you to do an in-depth fact finder to make sure your planning is okay, but what they find more effective is just to offer some reassurance or a second opinion or some value that maybe they weren't aware was out there, and that's a very effective way to get an introduction going. Again, just as a quick reminder, I know we said this with our last webinar, Principal did a study on some of these advanced planning business owner cases, and what they found is if you do one of these meetings per month and you move it through the process and you're no better than national average at closing deals, you're going to make an extra $50,000 in the next year doing that. So we certainly hope that you will take advantage of these opportunities. Jake and I would love to talk to you about how we can make these more relevant to your practice. We'd love to tailor them and customize them so that we can help you kind of incorporate it into your practice. And lastly, I do have one more question that's popped up, Jake. Are the fact finders available on the website, or do they need to reach out to us to get the specific estate planning fact finders and other fact finders you were referencing?
Just reach out to me, and I will send you whatever sort of fact finder you need.
Okay. All right. So we thank you so much. We hope we can help you create extra revenue for your business and help your clients. And so we hope you'll plan to join us again next time. Again, be on the lookout for the roadshow information. We are planning to come to more cities, more than just the ones that I referenced. We have a plan to be in Alabama and all over the state of Georgia. So we hope that you will plan to join us for our roadshow where we can dive into this tool a little bit deeper and find ways to help you grow your business. Thanks so much, and we look forward to talking to you again soon.